is the overwhelming sentiment right now on Wall Street. So are we headed for another crisis, or is this simply a market correction? Joining me now is Paul McCully. He is Managing Director of PIMCO. Paul, good to have you on the program. We so appreciate your time today.
Thank you, Maria.
Well, it has certainly been a wild ride out there. Let me begin with the markets. This week, the major indices hit correction territory, down 10% from the recent highs for the Dow, the Nasdaq, the S&P 500, mostly because of the worries imported from Europe. How do you see things? What does this mean for a long-term investor?
Maria, for over the last year, we've been talking about the economy being a bumpy journey to a new normal, and we clearly have hit a bump, and the bump is emanating out of Europe, which is truly having a financial crisis. So I think the markets are rationally de-risking. It's not pleasant, but it's par for the course if the course is going to be a bumpy journey to a new normal.
Well, it certainly feels like there's a lot of fear out there. So do you think this continues? Is there more of a correction to come?
I think it's going to continue until you see an adequate policy response to ensure investors that the world's a going concern, if I can put it that way. And I don't think we've seen that adequate response yet. You can see that Europe has tended to be very reactive, and the market has effectively booed each and every policy measure they've come out with. So I think we're back into that old game of waiting every Sunday night to see what announcements are going to be made by policymakers to try to get private sector investors to get their mojo back.
Right, so that they come out with some policy ideas before the Asian markets open for trading Sunday night, which of course is feeling like a deja vu. Europe clearly having issues. Japan maybe tightening, even China slowing down. The government said we want to slow things down here. So how do you invest in this environment, Paul? Is it having an impact on American companies in your view?
Well, I think that's one of the big issues that the stock market is grappling with, is whether or not these financial woes actually morph into economic weakness in the real economy. And I think that's a very legitimate risk, because the real economy runs on animal spirits. And your animal spirits, if you're in the real economy, are not particularly enlightened when you look at the newspaper in the morning and see that your 401k became a 301k. So I think that there is a significant risk of it morphing back into negative animal spirits on Main Street. So therefore, I think the markets are having to grapple with the policy uncertainty and policy woes. At the same time, they have to worry about a retreat of animal spirits on Main Street.
So how do I want to invest then in that environment, Paul? What are you raising cash? What are you doing in the face of all of this?
Well, I think investors should have been holding a fair amount of cash, and we've been holding a fair amount of cash because if the road's going to be bumpy, you want to have plentiful liquidity, and also you want to have cash to take advantage of opportunities. So I think that overall strategy makes sense, is that you have a decent amount of cash, that you're not too quick to put it to work, because when these markets are this choppy, they tend to overshoot. So don't try to catch a falling knife, but wait until you see a policy response that is overwhelming force that is going to work. And the policy response has not been overwhelming force yet. So therefore, staying on the sidelines seems to be the better part of valor to me.